Great. Sorry, I do so much prep on this Sunday period. I sometimes forget forget the clock, so overshot my prep a little bit. Right. Okay. What am I seeing? Significant push higher, but if we just reconnect with this 20-day average and then can't hold it, we are coming lower. So at the moment, we've got a 1, 2, 3 wave. If wave 4 comes into this resistance, then wave 5 could wing it back down to these lower levels, 31,200. If I'm wrong, if this is a sustainable push higher here on the back of good GDP, etc., then this pullback should hold. Normally what I do is, if I can see a good start to the week and a holding pattern, then I will follow that through into the rest of the week. So if we are going to hold here, we are going to pull back into this 33, 4 or 500, and then we've got to, and then we'll work towards 35,000. Non-farm payrolls, so it's monthly jobs on Friday in the US. Not a lot of other data out during the week. OPEC are meeting next week as well, so we'll take a look at oil. So significant bounce. Let's see. This obviously we need to see the pullbacks hold and some higher closes. We've come up on volume. So volume was pathetic on the downside. Actually, volume increased on this down move, which is confirmation of the move. Significant bounce on reasonable volume. Then the volume really dropped off, and so we actually came down on a lowish level of volume, and then we've pushed higher on a spike higher. We've broken recent volume trends. So at the moment, this push is sustainable. This is not, in my book, in my analysis, this is not a dead cat bounce. This is at the moment a sustainable push higher. All right, we just need to see if that follows through, if these pullbacks get bought. This 36,700 is 2021 highs made on the 30th of December. So if we can see this through, we could end up going back to that 2021 high. Moving over to, let's have a look at the very quick look at NASDAQ, and then we'll move on to Europe. NASDAQ's been the dog. NASDAQ was the first to sell, but that too has pushed back into significant support. If at any stage soon we close under that 14,000, then this is coming lower. Okay, so at the moment, the pullback to 14,000 is the buy, is the possible support buy, and then we need to close above this level to sustain that, because if all we do is push into this trend line, would I even have that lower? Hang on. Yeah, let me just redraw that. The problem with trend lines is you can draw them on at any level. There are different points you can draw them from. That's why they tend to be less reliable. Okay, so now the reason why I like that is because that seems to echo this channel, this trend line coming underneath it. So on Wednesday, we broke underneath this channel and immediately closed higher. So a significant bullish signal there on the Thursday, then we got the follow through on the Friday. However, if all we do is knock our head on this 15,000 and don't survive, then this could come back down to 12, which will be the 2021 lows. All right, so short-term bullish, but a lot of congestion above to get through if this is going to pull up. What do I think is going to happen? I think we'll knock our head on this 15,000 and then roll over. But I will be happy to be proved wrong. So if this is just a three-wave correction, if we've just completed a three-wave correction and the whole new move is going to kick off, then I would look for, yeah, so the main resistance is up there at 14,400. We'd have to close above that to warrant keep holding that. Right, where do I just put that from? Good, I picked the right one. Okay, so no, I haven't. I picked the wrong one. Just correct this. It's important that my system is clearly laid out and defined for me to be able to follow through. Yeah, so 50% of 2021 is the 14.5. So if all we do is push up to 14.5 and drop, then we're coming lower. If we close above 14.5, then this is a potential ABC correction, which is complete, and the bulls are bought, and then we can realign ourselves with that if that holds. DAX, German DAX, new low, close above next day, so that's a potential buy signal. However, we've got a lot of congestion up there at 15,150. So, and 50% of last year's move is 14,800. So again, if all we do is just roll back into the sell area and then fail, then we are coming down to 13,250 in this one. So short-term bullish, but we need to see some significant closes for that to follow through. Otherwise, this is just a bounce to be shorted into. Now, this is probably the most, of all the indices, this is the most interesting chart. This is the FTSE. Now, for any market, doesn't matter what it is, a commodity, oil, gold, Dow, any particular stock, any market in my book that can come underneath the previous year's lows and close above, that's very bullish. So we've had a little run down here and then immediately closed higher. If we can sustain, if we stay above this 7,460 area, then I think we're going to come and see 77.70 and potentially higher. Okay, so volume, we came down on higher volume and closed up on lower volume. So the volume does not confirm, but that is a very interesting chart. If we close right underneath that in any day this week, particularly Monday, then I will be reconsidering and possibly going back to a bearish tone. So obviously it's very interesting times. There's a lot going on out there, and you just got to watch the bigger picture to be able to gauge what Mr. Market wants to do. But if Mr. Market wants to keep this up and any pullbacks into 7,400 hold, then we are potentially going to go and find the top of that channel at that 77.70. All right, so you've got to try and cut out the noise and trust your analysis. That's all you can do in this. stage in this sort of environment when there's so much noise going on. But obviously with people lobbing missiles at each other, you've got to be cautious. Now, volatility index is still high. So this is a sign of fear. If that holds and this volatility index keeps closing higher, and you can trade it like anything else, it trends like anything else. We've had a three-way move into this resistance. We've pulled back into support. If this volatility index keeps closing higher, we could then get very bullish on the index, which is very bearish for the markets. So we need to see a lower number here. So a quick look at the dollar, and then we're going to get straight into stocks, or we'll go straight into commodities and then stocks. So non-farm payroll on Friday. Fed is the week after, I believe. Let me have a quick check, because I should know when the Fed are meeting. It must be the following week. No, we've got ECB on the 10th. No, okay. Right, Fed meet on the 16th. Right, so that's 2.5 weeks away. So if non-farm payroll is good and this dollar is supported, and if the dollar breaks that high, then that's a real potential fear level for the markets. So certainly that could potentially drag the US market down. If the dollar gets bought, particularly if the gold gets bought as well, that's a real fear factor. The last time that happened was 0708, where you had a very strong dollar and a very strong gold. The healthy relationship is divergent. If it's convergent, hold on to your hats. Right, let's go through a couple of commodities. Gold. So at the moment, this looks like a bit of a blow-off, a bit of a top in these commodities, or particularly oil and gold. We shot right into 2021 highs and came down on volume. So at the moment, I would expect that to see 1850. So if we do we've done a 1, 2, 3 wave push higher. We look as if we're going to do a 1, 2, 3 wave pullback to the 1845, 48 area. If we come back and hold this area here, then expect that to push higher. If we continue to close lower and the volume picks up, then this is just potentially going to roll over. I think this will come back and hold this ambush zone at 45, 48 area. I think we'll come back and test it and hold it and then go higher. Because I think this is just, it is a bit of a blow-off. Yeah, a bit of an what do I mean by a blow-off? I mean, it's just a very excessive move right into a major pivot resistance area, and just saw a heck of a lot of profit taking. Have we got any other examples of this? Yes. We did a similar situation here in November 2020, blasted up over a few days and then spent November, well, the whole of the rest of the month closing lower. So that moved into resistance and then just kept closing lower before pushing up into 2021. So be careful with the gold. Wait for it to settle down and watch that level and see if that then picks up. Trend line. Yeah. So that would, if this is very bullish, so blast it up through this resistance trend line If we come down and kiss it and hold at 14.45, 48, then that is really bullish. So that's what I'll be looking for. Gold, silver. Silver has done the same. So the pullback now in the silver is 23.40. Unless, of course, we just hold this pullback, hold the 24 and start closing higher off the gate. That's a possibility, but the most likely scenario is 23.40. You may not see as low as that. I'm bullish the silver. Oil, huge blow off, huge push higher into this resistance area. We could be seeing something of a rollover here. We did the same up here. So we actually had a potential sell signal, a new high and immediate close lower there. And this is something of a high spike pin bar, suggesting that we have had what I'm calling a blow off. In other words, a push right into resistance and then a lot of profit taking. But this is a bullish market. If you look at every time this touched the 20-day average, or even if it came lower, it very quickly went back up. So if we start to close above this 92 area, 91, 92, and subsequently hold 95, then we're going to go up to 108 potentially. Yeah, the next this is extreme level. The next extreme level is 108.35. So at the moment, pulling back. Doesn't seem to be sustaining these highs at the moment, but if all we do is pull back into support, then oil has got more juice, has got more momentum. Okay, so if we fall back into that 88, yeah, that would make sense. Pulling back into the February 18 range. So if we can come back and hold that, then I think and subsequently close above 95, then I think we can go see 108. Close under here, and then we're coming lower. All right, my preference is to wait and try and buy 88, 90, and see if that can close higher. But as with everything else, I'm prepared to be wrong. I don't think many of you trade commodities. I'll quickly flick through commodities. Wheat, significant sell signal, new high and a very deep close lower. So again, suggests to me that people are expecting a stronger dollar. So I'm still bullish the wheat. I would be happy to see that come down to $8. And on 785, I will be a buyer of wheat down there. Exactly the same pattern in the corn, and the same pattern in the and the same pattern in the beans. So that's gone right into 2021 highs and rejected it. But it just, as far as I'm concerned, it just got out of sync, out of whack with the 20-day average. So any pullback to 1483, I think this is a good opportunity for me. I'm seeing this, if these grains pull back further into support, that would make me want to get a chunk of them. Gas. See, gas is also quite sober here. Ever since the most recent spike was February 2nd, so we've seen a significant push higher on the gas. If we hold this level, this is now key line support. If we start closing higher here, I think we could wind up back to the highs. Now, cyclically, in the normal market conditions, gas would start to drift lower here, and then in mainly June period, the big utility companies would buy the contracts up and then take that into the autumn. So in theory, this should start to drift back. If it does push higher, then there must be a lot of fear in the markets, and that's the markets are getting spooked and they are taking contracts early. But we're struggling up here. The sell volume is increasing. I think short term that should come lower, but we're right in a crucial period. Okay, orange juice has had a decent pullback into support. I'm bullish on a lot of these commodities, including orange juice. I think obviously we're closing lower here. If we come and find this 13,268, I think that could punch higher. Obviously, if we close underneath there, then I'm wrong. But I think this buy area back into this support is buyable, and I would expect that to build and start to punch higher. Now, to trade these, you could trade futures, options, ETFs, or commodity-related stocks. I'll talk about more of that in a minute. And let's have a look at the commodities that I like. Let's leave the commodities and just get straight into stocks. Right. I have got a double position now, which is unusual for me. I don't normally do this. This is QQ, Quillen Tech. I'm not quite sure how they pronounce it. It's got an exposure to cybersecurity and defense IT. So for obvious reasons, I thought this would be a good one to get into. So coming up on volume. So what boxes does it tick for me? It ticks volume, trendline support. It's had a huge wave up and a 3-wave correction, tick. It is closing significantly higher on volume, which we talked about. So above the 20-day average, tick. So there's quite a few ticks this gives me, and so hence the reason why I have been buying extra positions, doubling up on this one. But the reason why I've doubled up is because I was able to end the day with a tight stop. Having bought a dip in this, I bought down here twice, and now looking to see, I need this to close above this 270 area, and then if it holds, then we could go back to £3, 295 or 310, or potentially a complete boomerang back to that drop. If I'm wrong, the volume is going to drop off. We're going to start to close lower, and we'll break down that trend line if I'm wrong. Any comments? Both CFD and outright in different accounts, different types of accounts. Andy's asked, did I buy QQ as CFD or outright? Did I buy the underlying asset? And the answer is both. IQE, so I'll just go through my stocks at the moment, then we'll go through yours. This ticks a lot of boxes, closed underneath the 2021 lows, and next day closed higher. This is what I'm looking for in the FTSE. So if the FTSE does this, I've not compared it. Fundamentally, I think it's much more favorable in terms of its products and brand and and balance sheet, but I've not done a direct comparison to dark, so I can't answer that question. So this is holding up. Volume's good, but not great. If we start to close underneath, as this is a chip maker, chip manufacturer in the 5G market and other markets, we've already pushed up into this grey zone resistance at 44 and pulled back. So if this is a 1, 2, 3 wave move, we should go to 45.50. However, if we start closing lower here, that may not work. So be warned. If you're not in it and you're interested, I would try and buy this grey zone, which will put it at about 36, 35, 36. If you're not filled, and I'm right about this chart, you may have to buy higher. Otherwise, back off. Rolls-Royce. This is still bearish. This is still a bearish chart to me, by my reckoning. Yeah, we were okay up here. These pullbacks got bought, sat up nicely, pulled back into the support from here. And of course, now we are underneath it. So if all we do is knock into 110 and close lower, then I'm going to have to get out. I've given it a lot of wiggle room, given the sort of conditions we've got at the moment. I tell you what, if this starts closing above 110 with volume, I will add to this one. I've deliberately kept my stop underneath this this breakup area here, so I gave it extra room. I've not doubled up on this, so I'm only, at the moment I'm slightly underwater. I bought 109, 110. It's currently 105, and it has been as low as 95. All right, so I'm slightly underwater on this one. BT I bailed out of before all this kicked off anyway. BT I bailed out at 199. We're currently 192. I want to see deeper pullbacks on this. I would like to get back in, but I'm not going to buy up here. I was in Vodafone, bailed out. That's still sitting underneath 2021 lows, so I would like to see it lower. If you're in it, I would just don't do anything, stay put. If you're investing in it and not swing trading it, because the exits I'm talking about are swing trading exits. If you are investing in it, then you are going to want to stay in this and avoid the noise. But given the fact that there is a lot of weapons being chucked around in Europe, I am being super cautious and swing trading, and I am not investing at this stage. I am swing trading. In other words, if a stock moves into an area of resistance, I'm just taking it off. So I got into Vodafone down here. I took Vodafone off at 123, or I think 123, and it's gone as high as 140. And that happens, you know, if you're as a swing trader, I take the swings because the frequency, the number of times a stock breaks out and runs like that is low. Markets move sideways 80% of the time. So I've decided that at the moment I am just only exercising swing trade exits. And that's exactly where BT has taken me. And so that's why I would ideally like this to drop back to 170, 175, and then potentially get back in. Right. This one I have been getting back into, but I'm not, at the moment, I'm nervous about this one. It looked good here, new low, close above on the 4th. Bought 125. And last week we saw a low of 87. But the volume has picked up. So that normally an increase in volume and higher closes, you might see something, but it's a very, very sluggish stock that the market at the moment does not appear to like. This is TXG, the Hut Group, so be very careful. I've also taken some heat on Pfizer, but I'm very enthusiastic about Pfizer now. That's a buy signal there on Friday. So 46.55 now is the pullback. If you're interested in this, and keep your stop under 44.80. If you're stopped out, obviously given what I've said, then just stay away and don't touch it until it puts in another buy signal. And what else have I got? Rio, I have traded. So again, I got out of Rio at 55, 56. We're still only 55 and a bit now, 56 area. The volume's good. The pullbacks are getting bought in Rio. It's got the potential to push higher. I'm just backing off it. Let's have a look at dark. So I'm switching back now to other ones that we've been talking about. Decent volume. That's a decent volume bar on Friday. It's not closed above. It's caught in a channel for me. So technically, this is more channel bound, whereas QQ is breaking up. It's a good chart, but you tend to get it pushes up and then drops, pushes up and then drops. So it keeps knocking into this channel. But for the plus side, the volume was good. But we've seen reasonable move pushes high in the volume in this one, and it just drops out. So I'm not in this, but this is also a cybersecurity outfit. Which has come from a great height. So it's 60% off its highs. Huge sell-off up here on a good technical bear rating chart for me. So you get a major drop on the 25th, and it pulls back into there on the 1st of November. That's the kind of thing I like for a short. If you do miss an entry, I would get back in on about 40, 50, normally 50% of that of a drop range. But I wouldn't short this sector. But I'm just suggesting, I'm looking at it in terms of chart patterns, not as a stock. I would not short a sector that I like, and this is just a week. Results on Thursday, right? Okay, let's move on and try and cover a lot more ground. Right, let's look at. So just go a quick roundup of the banks. We've got Lloyd's. Come right back to, that was a nice entry down there at 46. Now, all we've done is recovered into a big sell bar. So technically, that is still a bearish chart. I'm very interested in Lloyd's. I do think Lloyd's and Barclays is, so it's come right into that trend line, and so a heck of a lot of support down there at that low at 46, 46 and a half. I'm just going to leave this and see where, because I keep saying, I'm just going to wait till one of these out of the way, see how the market reacts, and then make a judgment. Otherwise, I will take a bite of that one. Barclays, ex-dividend on Thursday, right. You tend to find this once you see once you pull up a particular company in a sector, you can see how relevant the sector selection is in your portfolio. So again, this has had a lovely move into 220, 219, 220. Significant sell of it on the Thursday with this bounce on the Friday, but the bounce is still only into a resistance area. So there is a distinct possibility that could come back to 175 and maybe lower. We're underneath the structure there, so good reason to sit back and see if that can drop back further into 175. Right, enough of the banks. Let's have a quick look at oil. Tullow is picking up in volume. See, this 60, 61 was a very tough area for it. So we've had a series of a lower high, and the lows still looking fragile. I'm not impressed with this chart at the moment. I guess it's not a particularly heavily traded stocks. You tend to get more ragged patterns with these smaller stocks anyway. I certainly think if you bid on 50 and get filled at 50, tuck your stop under weight 47, it is building. It does appear to be holding. But if we start closing under 50 and start closing under 49, then that's potentially lower. But it does tick a good few bullish boxes, so pullbacks at the moment are still to be bought. You never know, if we get up to 65, if we keep bashing this 65, we could break through. Every time you knock into an area of resistance, it gets weaker. So we've done 1, 2. If we're able to close higher and close above 55, the probability that that can go back to the highs and break is higher. No certainties in this world, obviously, but the probability of that getting there and then ultimately going up to 75, 78 is a realistic probability, but nothing more than a probability, because that's all we are dealing with in trading. If you don't understand that, then don't trade. Okay, let's have a quick look at, sorry, bouncing back to oil again. BP has just sold, yeah, I was just about to say that. They've just sold their position in Rosneft or Rosnet, or whatever they're called. So it's come back to support. I wouldn't mind betting that it could come back to 350. Again, all that's done is peeled back into a sell bar. I don't think that stocks like this are just going to turn around and pop back up. I think this could come all the way to 350. Do you think it's going to take a hit on Monday? Right. Interesting. Well, the chart, like I said, the chart suggests that could come lower as well. We've had a bounce on the Friday, but it was not significant. Given that, let's have a look at the energy utilities. Centrica came into 71, ended up at 77. Significant volume. This has come a long, long way. So again, it's a good stock. I just think that might peel back further. Personally, I don't like buying high. I don't like paying a high price. This run is potentially already in progress, so I'm not going to trade that. I'll tell you what I was looking at. I think this is sitting up high as well, tracks. Yeah, that's popped. General. Sticking with the, this is an oil 88E, okay. Now General's got, General I think is exposed to this volatility, is exposed to this war with their pipelines. So I would be, and there is no, for my money, there is no reason to buy that. General looks lower to me. 88E. Look at Profact. What have I done wrong? Yeah, it's such a thinly traded one. High volume was not bad on Friday, decent close. So in theory, a pullback to 2.5, sorry, 2.1 or 2.1p is good. These are obviously more the thinner traded stocks for me are much more speculative, but at least the trouble is you can get a lot of slippage in some of these stocks because they're thinly traded. But on the whole, same story with Tullow. If we come back to 2.8, every time we come back to these highs, the resistance gets weaker. So it's a decent chart. Volume's not bad, not brilliant, but not bad. If you want to take a punt on that, because that may go back to these highs, 4.7, it may not. Any other energy that I like? Not in London anyway, not on the London market. Miners, PAF. Saw there's a lot of resistance. That was resistance from February 2021. I can see it's just, again, quite a thinly traded stock. So I would be patient and wait to see if that can pull back into 20. And then if you get a pullback, then you get a tighter stop. Sylvania, let's look at the commodities. Not bad. Looks like it needs another deep pullback though. Let's look at polymetal. What else do you want me to look at? Ouch. This has got Russian exposure, isn't it, I think? Ouch. That is horrible. You still in this, Yonja? So that's broken. That's gone into extension levels. 675 was an extension level. Is she not with us? Maybe not. Ouch. Right. Money Supermarket. Yeah, still in it. Wow. Anything Russian seems to have just bombed. This Money Supermarket is, I tell you what, if this goes back to 190, 195 and holds, again, it's quite channel bound, but it was certainly a good, I suggested you might want to try this at the lows. Decently pick up in volume, very significant pick up in volume. So it might pull back to 195, and then the top of the channel is 225. As a swing, personally, as a swing trader, I would get out at 225. It's, in theory, a market that can hold the previous year's lows, could climb back into the previous year's price. So if it does hold in the coming days and weeks, and maybe even into the autumn, you might find that 247, 250. Right. Oh, let's look at the airliners. EasyJet's come right back into 597 support. Hey, who would be an airliner with what's going on at the moment? So I don't like these airlines anyway, but I know some of you do. IAG. I'm just trotting across the sectors at the moment. Higher close, decent volume, but I mean, all the time there's missiles flying in the air in any part of Europe. I wouldn't touch it. We could so easily come down to these lows, and who knows, maybe even more. I mean, there is some evidence that it's decent volume, it's a higher close, it's a key trendline support. So if you are bullish, if you personally are bullish on IAG, then this could be your time, but it's not for me. Coming out of airlines, looking at Sainsbury's, still a likelihood of a gap fill at 257 for me. That is not, it's a new low, new close above, so I guess technically that's a buy signal, technically, on Sainsbury's. Let's look at Tesco. You'd have to, I mean, there's no why. I would not trade that at the moment. I would look for a deeper pullback. I do not like that chart, but I could be wrong. Right. Chuck some more stocks across at me, otherwise I'll just keep going. Let me get my list. Right, okay, I've just got BAE, okay. Yeah, I meant to show you, I'll just look at this BAE and I'll go to the ones I want to show you. Wow. Nice chart. I'm hoping that's what's going to happen with QQ, but we'll see. Let's have a look at the, let's run the ruler over the 2021 range. So that's gone right into an extension already. You in this? You in there, Anita? Is it Anita? Yeah. Decent volume, decent pickup. So it looked good on the 22nd, closed higher on the 23rd. The pullback at 599 was there on the 23rd, and then we shot up on the Thursday, Friday. Yeah, it looks, I mean, it's gone, isn't it? I mean, any pullback to £6, £6.10 is potentially a buy, but you may not get the pullback. So very nice stock. Thanks for drawing that to our attention. Let's look at, now I'm interested in commodity related stocks, and here are some. TP ICAP. These guys are brokers in the commodity markets. No, not doing it. Not touching it at the moment. I think Man is the same, Man Group. Whoa, that's a completely different story. I'm liking this one. I am going to buy a pullback in this one. I am going to buy 180. I'm going to bid 185, and I'm going to get out if it closes underneath the 174 on EMG Man Group. I need to do some more research on it, just to check the balance sheet. I don't like heavily indebted companies, so I want to see the balance sheet is in reasonable shape. But on the face of it, that looks good. That's POG. That's a great short, isn't it? Talking of shorts, let's look at get an update on my Car Factory short. Yeah. So I sold at 64.5 initially. Sold 64.5, got out at 54. Sold 62, and I'm still in it. I think this will break 46 and come down to the 30. Obviously we've got a decent one to, we're potentially still in wave 3. That's the direction, that's the pullback, this is the move. So impulse pullback move. You're gonna have to get in quite low, I think, around about the 50-52 mark, with a stop above 56. So your risk-reward ratio, if you get in now, is quite poor. But obviously I'm in it because I believe that's lower. Other retailers, if you look at Next, the Next started to peel off back in September and December, and has not performed ever since we saw this breakdown here. I would not buy this. I don't think it is actually, having said that, it is a buy signal, new low, close above, but on low volume. So what puts me off that is we closed higher on a lower volume. If you look at the online closed retailers, boo. Same story. We did close higher, but on low volume, and ASOS is not great either. That is not good at all. The volume was pathetic. So you can see the weakness in these markets. Yeah, you're not seeing the buyers are not picking up these lows on this sector. Aviva is looking good, isn't it? I think. That one isn't. Personally, I wouldn't trade that. It's come up on volume. Again, it's only crawled back into that area there. That has put in a buy signal. Pin new low, close a bar. Volume's not bad. That one, you just it's dangerous times. If you're buying anything, you might want to reduce your position size just in case everything goes really wobbly. But that is a technical buy signal on Aviva. Legal & General. Same applies. It's ticks a few boxes, doesn't tick enough boxes. I'm not convinced that is going to push up, but I could so be wrong. I wouldn't mind betting that will come back down to the lows. It's under this resistance line. All it's doing is retesting it. I would sit tight, but yeah, like could be wrong. Maybe I'm being too pessimistic. Am I being too pessimistic? Well, we're going to find out on Friday. And anything else I need to look at? What else? I'll look at a few US stocks, but I'll just finish off on the UK for now. I've been stalking this one, but I'm not happy. AJ Bell. So it's about, this one's gone, this Russian, what do they do? EVR, I've forgotten. It's gone right the way back to March 2020 lows, steel, right. So we had, that, I think that's a great bear rating setup up there. Volume, if you look at the volume alone, if you're in a stock and you're going up without an increase in volume, be warned. If you start to close lower or with higher volume, you know they're potentially bailing out. So there was clear signals in January that was in trouble. Technically, there were clear signals in January that was in trouble. It was coming down, breaking support, closing lower on volume. Significant volume on Friday, but a pathetic bar. For that to be a reversal signal, I'd want that to close above 248. So steer clear. Let's look at anything else I want to, let me look at right move. That's a very healthy, technically that right move's a buy. Decent higher close, significant engulfing bar with volume. Right move is potentially a pullback at 625. I'm just going to dart around a few more sectors. Property sector, Cyan, lower. Fresnillo, struggling. Right. I think EVR is a horrible stock, but yeah. Safe. This had a really decent run into 1452. Very handsome close higher. Didn't close above the 20-day average. Not for me, but that's a very good bar on Friday on safe. That's a handsome close off of the key support on SGRO. Bunzl. These are all sort of slower moving stocks that you may or may not be interested. Hammerson. I think Hammerson was another one of these where you should have gone out if you're in it. Should have got offered out just under that 40 to get out. That is a very handsome close on Friday with volume. I'm not a fan of this one. It's a bit of a slug, very slow, very untidy chart, but it does grind higher if you pick the right spot. Right, quick flick through. Forgot what PFG is. What's PFG? Let me have a quick look. I haven't got time to look. Somebody tell me what PFG is. I was going to look at Petrofac. Right. This is, I need to do some investigations into this one, but Petrofac is a potential buy for me. Not that impressed with the volume, so I would definitely on a watch list, not necessarily a buy. Okay, let's look at some US stocks. Amazon pulled up on that. This was the earnings bar, so we're right back to the earnings low and it's picked up. Massive volumes. That Amazon looks very interesting. Facebook, significant volumes in Facebook. Uber, buy signal on volume. So Microsoft, higher close on volume. So the US market has really picked up, and the disruptors, Hood, significant volume, not a very sober, slow, small move. PFE I've talked about. MU, yeah, it looks higher. Roku, gaps down, it's only just filled the gap. I would like that to peel back. So gap down on the 18th. That must be in the earnings bar, mustn't it? I'd like that to peel back to at least the 12. But I do like it. I love the stock. It's been as high as 49 and got really pummeled. I would be prepared to risk a position on Roku. Path. Looks if that might start to build, but otherwise not a great chart. DLTR, very popular one. Reversal on volume. That's a reversal signal on volume on PLTR. So I think that's a buy at 1080. And that has seen 45. Right, I'm done. DKNG, DraftKings, same as Roku, gap down, just backfilled, but looking better. That's it, I'm done. Right, thanks for your company, guys. A lot of people left anyway. I will be doing a Wednesday midweek review. If you haven't got a link, go to Trade Easyway and drop me a line. And I will be doing some extra workshops on day trading, because this volatility is fantastic for day trading. Brilliant. Thanks, guys. Bye for now.